Today's Talk About It Tuesday question is: do you believe 2024 will be a seller's market? All right, so we're talking about real estate here, and let's make a distinction between a buyer's market and a seller's market, and then we'll look at 2024. So, a buyer's market is a market in which it is more advantageous to buy because you're likely to get properties at a depressed price, which leaves a lot of room for appreciation, which means you're going to make money on the sale because you're probably buying below what the baseline is. And in a seller's market, it's just the opposite. That means you've probably gained a lot of equity since you purchased it. And when you make your sale, you're going to make a lot of money because prices are higher right now. So there are a few factors that will dictate whether it's a buyer's market and a seller's market. And the most fundamental thing we have to look at is supply and demand. When the supply or inventory of properties, available properties, is high and the demand is low, and the demand can be low for several reasons. It can be low because there are not a lot of available buyers, able buyers. It could be the population is shrinking. But when there is more inventory than you have able and willing buyers, then it will always be a buyer's market because there's competition amongst sellers to get this small pool of buyers, so they have to bring prices down. Just the opposite happens when you have a situation where you have a desirable area where the inventory is small, where there are not a lot of available properties, but the demand is high because you have a lot of able and willing buyers competing for the small amount of inventory. It will always be a seller's market. So there are several factors that can influence this supply and demand thing. And some are on a macro level, meaning it's nationwide, and some of it is very regional. So let's talk about things that affect the macro. So interest rates affect the macro, meaning when it becomes more expensive to borrow, then a person can only afford to borrow a smaller amount, which means they can't afford to pay higher prices. So when you have lower inventory or even high inventory, and people can't afford to pay the prices that you have. So let's just look at what happened during COVID. We saw a rapid appreciation in real estate values because there was such a huge demand. We saw real estate prices skyrocket. Those prices have held, even though interest rates have gone up to try to stem inflation. So there are less buyers available because they can't afford to borrow at a cheaper cost, which means the amount they can pay every month is lower. So now you have a situation where there's high appreciation, which means prices for real estate is expensive, but you don't have as many qualified buyers on the other side on a national scale. So we saw sales go down in 2023. We saw it go down dramatically in 2023. As we saw the interest rates continue to climb, we saw real estate sales go down. So that meant it definitely was not a seller's market because you couldn't get the prices that you were demanding. But let's look ahead to 2024. We know inflation has gone down, so interest rates are anticipated to go down. So currently it'll cost you a little more than 7% to get a mortgage, which is, back in the days wasn't expensive at all. But in the last decade, that's a lot of interest. But by the end of 2024, we're expected to see maybe 4.6%, which is significant, a significant drop, which means it'll bring a lot more buyers into the market to compete for the inventory that exists. So maybe the appreciation that was gained during COVID will hold, and it will make it a seller's market because you have buyers competing. They say about 6 is like the magic number to really spark the market of bringing buyers back into the market. So If we see it go down from over 7 to maybe 6, and then as low as 4.6, then we'll see a lot more buyers coming to the market. But that will still be regional. So there'll be areas where industries have left and incomes are low, where you still won't have a lot of available buyers, even though the market conditions, the overall economic conditions, make it more favorable. You still don't have the demand. So when you have areas where the population is dwindling, where you have areas where there's just so much available property on the market, it still won't be a buyer's market. I mean, a seller's market. But the National Association of Realtors has identified 10 markets in 2024 that will do well. So I'm going to just tell you what they said. So Austin, Round Rock, and Georgetown in Texas, Dallas, Fort Worth, and Arlington, Texas, Dayton and Kettering in Ohio, Durham and Chapel Hill in North Carolina, Harrisburg and Carlisle, Pennsylvania, Houston, the Woodlands and Sugar Land in Texas, Nashville, Davidson, Murfreesboro, and Franklin in Tennessee, Philadelphia in Pennsylvania, Camden, New Jersey, Wilmington, Delaware, Portland and South Portland in Maine, Washington, D.C., Arlington, Virginia, and Alexandria, Virginia seem to be markets that will do well because the appreciation is held. There's a limited inventory relative to the amount of demand that exists. So 2024 will be a seller's market in some areas where there's high demand and availability of buyers who are capable. And in some areas, it will remain the same. So when you have certain places where the inventory has been sitting there for decades, we know some cities like Baltimore have been sitting there for decades. I don't think it'll change much. When you have places like Detroit, where inventory has been sitting there for decades, it's not going to change much. We have areas like St. Louis, where inventory is sitting there for decades, it won't change much. But when you look at places like New York City, where now they have to change the zoning because we've literally run out of space, and so now they're building up, and they're building in areas that were less desirable several years ago, and they're building wide and up, and even in those areas, then it'll be a seller's market. So seller's market looks good in terms of the interest rates going down, looks good in terms of the appreciation holding because inflation is pretty much stuck. It looks good in terms of industries coming back in certain areas. So 2024 looks good in certain regions for a seller, and in some areas, not so good. So real estate is always regional, but things are definitely looking up in a real estate market if you are a seller. So hopefully that answered your question. I'd like to hear your thoughts, your ideas on 2024 in real estate. Please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.